you know for sure this is going down. There you go, it's going down. Again, another red candle. If you took your trade here, you have to protect it by the major levels, and just take a look how beautiful it bounces off these major levels right here. So you would have caught this trade here, right? And if you notice something very interesting, this trade has created a selling channel, right? Let me chart the selling channel right here immediately. Now, why is it forming a selling channel? Now, I'm really curious about this, right? If it forms a selling channel, you want to be careful, especially if you have puts, because if this breaks out of this selling channel, there are two scenarios that can be happening. The first scenario is that the sellers have lost control of this, and the buyers, especially from this very key support level at 414, are taking back control. Now, if the buyers are taking back control and break out of the channel, you have to close all your puts. No need to be holding them, right? When do we know our sellers are still in control? Now, we know sellers are in control if they continue some sort of controlled buying channel and they form a clear bear flag right here. So that's what you want to be paying attention to, whether we form a bear flag right here. Right, so remember, because we already formed a selling channel, you have to be paying attention to see if this selling channel is being respected, right? So let's see. Okay, broke down, no, got rejected at orange. So now you have to be paying attention. Does it reject itself off this selling channel? If not, you have to cut some contracts here for your remaining runners at least, and cut the other contracts off yellow here, because you know that the sellers are no longer in control. And we can reopen puts again, right? We will find another structure, maybe another head and shoulder pattern here. So don't be wasting the move here, because you're already, right? You have channels here, you already know what's going to happen. Right, okay, some rejection here, that's great, right? So still holding on to your runners, but then this happened, right? It broke out of the channel here. This is where you need to be cutting your puts. Now let's see, does it go down? Now we see some retracement off here, and it bounces back up to yellow. Now this is a little bit concerning, right? Because you notice we formed an inverse head and shoulder pattern here. Now I want to be seeing if this is a controlled setting. It seems like a controlled setting, but the range is just too small to be planning for a possible control setting. But I'm going to be charting the channels anyway, because I want to see if the sellers continue this buying channel up. If you're a seller right here and you met with some bounce here, right, where is a realistic place for you to start selling again? Right, obviously I will start selling again at 415, right, where there was previous support here and it turned into resistance. So here's a possible place for a bear flag, possible. Secondly, I would also allow for the buyers to go all the way to this very important rejection level here, where we met with so much rejection. So this is also what you call a possible supply zone, because you know that there are plenty of sellers at this level right here. So these are the two levels that I know if I'm a seller, I may want to be taking the buyers to before I start rejecting the price again. Now, so we have a selling channel here now. Let's see where the sellers are controlling the buying, or the buyers are breaking out and they are back in control. Right, so we have some rejection here. Now, it's not out of the possibilities of taking puts here again, right? So, but I mentioned earlier here, it's very difficult for you to be chasing puts here, right? You can take puts here, you can take puts here. There are certainly more confirmation than usual. Why do I not take puts here, especially if you're a fresh trade? Now, firstly, because we broke out of the selling channel, right? We don't know for sure that this is a possible bear flag. It looks like one, and there is a possibility you can take one here, right? So if I'm adding winners, I will add on here after closing my winners here, right? So if you close your puts here, you're waiting for another entry, right? Here's a good entry, right? So let's say I closed my puts here at $2.40. Now, right here is probably worth only $1.80, right? So this is great. You're making 60 cents profit just from opening a new trade right here. So that's a fair place to be opening your trades, even though we broke out of this selling channel here. However, if you're opening new trades, you need more confirmation, right? So right here, if I'm opening new trades, what sort of confirmation will I want to see? I would rather wait for another rejection, right? If I follow this buying channel here, I would rather wait for another head and shoulder to form, or when I do reject from this, I want to see it clear orange before I see some sort of retracement and take a trade from here instead, right? Because why do I want to subject myself to the possible risk of a chop here, where I know there are sellers and buyers at this level, and where I'm in a buying channel right now? I want to see at least myself breaking out of this buying channel, right? So if there's a certain retracement, maybe like that, right? Maybe I would take puts here, but not with such close range to 414, right? So in this case, I would wait for it to bounce off orange. Here I'll be taking my puts. Right, as you can see earlier, we bounced off this resistance, so there's no need to be chasing a trade. So right here, I will not be opening new puts unless I have previous puts that I